Mark Zandi is chief economist at Moody's Analytics. He joins us live now. Mark, thank you so much for being with us. So the big concern here when it comes to stocks are down about 800 points or so in terms of the Dow. The big concern is really what lengths the Fed is going to go to at this point to curb inflation.
Well, they're going to raise rates. It's just a question of how much and when. They meet this week. My sense is they'll raise rates a half a point. That's what they've been signaling to us for quite some time. I think they stick to script. But as you pointed out, there are a lot of investors out there thinking, given the really ugly inflation numbers we got last Friday, that the Fed's going to be even more aggressive and raise rates by 0.75 of a percentage point. I don't think they'll do that. I think they've got concerns about the economy and recession, so they won't go that far. But they're going to, put out a strong statement because they want to make sure everyone believes that inflation is going to come back down in the not too distant future.
Yeah, 0.75 is too risky. That's what a lot of people are saying, especially given the concerns right now about a recession. What is your expectation about the U.S. going into recession here? Do you anticipate a recession? And if so, how deep do you think a possible recession could be?
Well, I think recession risks are uncomfortably high, and obviously they've been rising. But I think we'll be able to make our way through without actually suffering an economic downturn. It's going to feel uncomfortable at times, like today when we're seeing all this red on the screen, with the stock market. But I think we'll navigate our way through. The economy's fundamentals, it's balance sheet, household debt, corporate leverage, the financial systems, strength, state and local governments, all in pretty good shape. So, that would argue that we'll be able to avoid a recession. But if I'm wrong and we actually do go in, then all those things I just said would argue for a more mild economic downturn. Certainly nothing more significant than what we've experienced typically, like recession 6 to 9 months, unemployment, which is at 3.6%, rises to something like 5.5 or 6%. So I would expect if we go in recession, it'll be a relatively modest one.
Mild and relatively short-lived, do you think?
Yeah, yes. But, recessions are just really not good, right? Because a lot of people are suffering financially in a very significant way, particularly lower middle income households who, don't have a lot of cash cushion and financial resources. They're going to be under a lot of pressure here. So, and they've only recently kind of gotten back on their feet given what happened with the pandemic. So we really don't want to go into recession. But yes, from a kind of a 30,000 foot level, if you're looking at it from down on high, I expect a recession. If we have one, would be 6 months, 9 months, something like that. Unemployment would rise from 3.6 to 5.5, 6%, something like that. Not good, but in the grand scheme of things, kind of more typical, comparable to other recessions we've experienced in the past.
And quickly, how close are we, do you think, to inflation actually peaking right now?
We're there. Which month, impossible to know because that depends on oil prices, which goes right back to the Russian invasion of Ukraine and what governments are doing in response to that. Like this recent spike in oil prices is due to the European Union's decision to sanction oil. So getting the timing right's wrong, but it feels like to me that, we're closer to the end of this than the beginning. I think inflation is peaking. We should see a significant moderation by the end of the year, certainly by this time next year.